This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of June 19th through the 23rd of 2023. Again, a daily podcast, just one of the benefits you receive as a member of TF Metals Report. You also get access to what we call our Thursday Conversations, which is a public podcast every week that we record with movers and shakers in the precious metals industry. This week, we had a U.S. market holiday on Monday. So instead of having a Thursday conversation, we had a Monday conversation. I encourage you to go to the tfmetalsreport.com homepage and listen to the entire discussion with my old friend Andrew McGuire. It's about a half hour, and it's something you want to hear. Again, the entire audio is on the TF Metals Report homepage. Just scroll down, you'll find it there. Here's just a small sample of some of what Andy and I discussed over the course of that 30-minute podcast.
Gold has become a first-tier asset class on the 1st of January, i.e., it is valued equal to cash, bonds, etc. So hold on a minute. If I'm in the risk business, I'm trading other products and I need a hedge, why wouldn't I also diversify into some gold hedges? They're first-tier asset classes, so why would I not buy some? And that's exactly what's happening. So now what you've got is the myopic, price-chasing, dot-chasing group of speculators who can be absolutely set up. You buy these chips from the casino, the open interest from the casino. They know exactly where your pain point is. These are the guys that are causing the problems. This is why you see gaps being created to the upside, then the gap getting closed to the downside, and this incessant little game. But within this short-term volatility is actually a group of speculators that are split away and saying, hold on a minute, I'm using this as a risk hedge. You can't rinse these guys out because they're using it as a tool. And I think this is an important point to note. So really, when you are running a casino and you basically in a casino environment, and you are then now losing some of the guys playing the high risk tables, then you are really very much constrained to just working on those guys, because just because 10,000 speculators or 10,000 open interest or 100,000 open interest goes into a speculator category, it doesn't necessarily mean that there's 100,000 open interest contracts that you can easily rinse. So it's a big change. And so many things have happened since the 1st of January. So yeah, we're 6 months in. People are wising up. By the time we get to the end of this year, many more people will understand that this is a first-tier asset class.
U.S. trading for the week finally began on Tuesday and manned the daily chart of the dollar index. By the time we get to Friday, we're going to talk about this chart as well. But on Tuesday, it was a big part of the discussion. And here's some of what we talked about that day. Let's focus on this dollar chart because this is really very important. Again, failing to make a higher high, breaking down through 103 with a big red candle last week. And what did we say when that happened? Well, it's probably going to 101, but recent history would suggest, as you can see in the purple circles, that the first thing that happens is a bounce back up to try to get back above 103. We spoke of this on Thursday last week and said, you know what? Probably going to happen. Goon Bullard's probably going to come out tomorrow morning and try to talk it back up. It wasn't Goon Bullard. It was Goon... Shit, I don't remember which one. Doesn't matter. Anyway, as you can see, in January, it took 4 or 5 days, tried to get above 103, did not, then fell to 101 by early February. In March, took 3 or 4 days, tried to get back above 103, it did not, fell to 101 by mid-April. And now here we are, taking 3 or 4 days to get above. This is why this is such an important day tomorrow and Wednesday as Powell speaks. And we will see what happens, because this chart would indicate 101 is next. And if we're going to 101, then this contrived shakeout washout today begins to make a lot of sense. Morale did not improve, and so the beatings continued into Wednesday, with both gold and silver falling sharply. Silver, though, is looking pretty bad. It's trying to find some support at its 200-day moving average. It would ultimately fail to find support there, but we didn't know that for sure on Wednesday, and so that was all part of what we discussed as we looked at the charts back on Wednesday, the first day of summer, June 21st. And finally, here's that chart of silver, again, breaking down slightly below the 200-day moving average today, but then bouncing and closing above. But man, those are two really ugly candles from out of the blue. Again, what does silver have to do with this higher for longer crap? And if we got smashed yesterday because of, oh, look how strong the economy is. Well, don't you use silver in the economy? I mean, copper was back up today. It wasn't hardly down yesterday. So what's going on here? Sure looks like end of the month shenanigans, manipulation, and fun and games, if you ask me. Let's see if we can hold above this 200-day and crawl back higher as we go through the remainder of this week. Gold is having a tough time too, as interest rate hike expectations are going up, and we're getting a little bit of a capitulation of patience, as I call it, as speculating hedge funds decide, why do I want to hold these COMEX gold contracts? I can come back and buy these 90 days from now. In the meantime, I can go invest in something else. So funds are liquidating and price is falling. Where might we find some support? Well, that was a topic of discussion on Thursday, the 22nd. And if that's the case, well, then what would you expect for gold? Well, at the same time silver was doing that, gold never did get to its 200-day moving average in February and March. It double bottomed. But both times it was within what, $10, $15 of that 200-day? So I'm not saying this is what's going to happen, but again, this is something to consider. Silver comes down a little farther before the bond market turns, and before the silver starts, or the dollar index breaks a little further, then silver maybe comes back, goes down to 22, 21.50 at the bottom. If that's the case, where would gold bottom? Again, just above this 200-day moving average, which right now is 1892. So maybe somewhere between 1895 and 1905, maybe. If you're looking to buy the dip, fund that CyberMetals account, that would be a logical place to think about it. Let's put it that way. And on Friday, we wrap up what was a very frustrating week for the precious metals with a very frustrating day. The metals looked like they wanted to rally for a while this morning. But then after the U.S. PMIs were not as bad as the European PMIs, suddenly it seems as if maybe the Europeans should be less hawkish than Jerry Powell and his Fed. And so the dollar rallied. And the dollar took off 55 cents to finish just below that key 103 level. So let's finish this week with that chart. If you follow along with these weekly podcast summaries, then you know we watch the dollar very closely. It looks like it's made a lower high on the chart, and there's a clear resistance arrow that is forming a little bit of a wedge. Looks like now that it's below 103, it wants to go to 101, but we can't say that for certain. It's going to be a busy week next week, and that will help decide what the dollar is going to do next. We get the latest PCE inflation data, a couple more suggestions of where things are headed from Jerry Powell, and then the week after that, the first week of July, brings the next jobs report in the U.S. So there's going to be a lot of things that will move the dollar in the days ahead, and we'll just have to keep an eye on it. For now, though, it's time to wrap up the week. Thank you for listening to your TF Metals Report podcast highlights. Hope you appreciate this service. Hope it encourages you to join TF Metals Report. It's a great online community with analysis like this every day, and it's only 50 cents per day to join. So please check us out, tfmetalsreport.com. Have a great weekend, everyone.